All right, hello everyone. Great to see you all on this Thursday, May 14th, the day before our launch date on May 15th, tomorrow. Great days coming. So if you didn't email me yet, you still have a final day to do it at tradingwithjasmine@gmail.com. And we definitely have been getting a lot of your emails, have been answering them very quickly, and you can see that we are very excited of what's coming up next. You know, it's interesting about, I remember when I first was in a program, and it started with just basically Sam and two other instructors holding the XLTs. And, you know, they started out with a very small group. And of course, everyone's always concerned, you know, if the group grows bigger and things. But I can assure you one thing, that the team we have created is very aware of everyone's well-being and all, and definitely is going to take care of everybody as we start to, you know, this new venture together. So it's a very caring team, and we continue to build that way too. All right, so support is with me. Going to answer questions for you as well, and today we got a lot of charts to go through, so we will he will be answering a lot of questions for me. All right, let us get into our current market focus. So you can see since the last time we've been here that prices have continued to drop from our supply zones. So now quality fresh zones in terms of demand are lower. Some markets such as the Russell really doesn't have any fresh demand zones. We did come back to some areas where we have tested before, and we are holding there. And then, of course, we'll take a look at our higher time frame fresh demand zones a little bit lower too as well. Okay. And another important point is that the current key correlation markets, so meaning bonds, dollar, we are back at supply zones. However, none of these are fresh supply zones. So we have been ranging for quite some time. So there's very good reason for it to still continue inside of a range. But we have developed some demand zones below current price at the moment. So we will go take a look at them too as well, which could help us in our further belief of the market. So we will take a look at those as we get into the markets as well. All right, let us start. Okay, so we are looking at the S&P, and before I go there, let's just take a look at the other two markets that's been also, you know, driving as we come across the globe. The DAX is still the weaker market, the German, and you can see that we have come down to not near its daily area. Did come in pretty close to filling that upper gap, and you can see now we are testing back down to these lows. Yeah, but in general, not having the same kind of rally. As you can see now, we do have a 15-minute supply zone at 10:55.96 to 10:6.44, as well as a 30-minute supply zone coming in at 10:6.06 to 10:6.45. Demand you can see a little bit lower coming down. The first area is going to be that 10,047 to 9989. So that's going to be testing that 10,000 mark, as you know, you can see as we start to come up. And then below that, you can see once we get below this area, and then we're going to hit into the gap down below. So that looks like the DAX, where it is the market that is struggling more so in general. Also today with the unemployment claims, but of course, we kind of know that that's not going to be a good number. Yesterday with Powell talking, of course, caused, you know, they say that he caused the issue in the markets, but really we were sitting at supply again. And yeah, he didn't sound that great, but what were we expecting? You know, were you expecting him to say that people can't predict how things are going to, you know, in terms of monetary factors, continue on? Of course, if you hear the Fed president say, of course, that makes things even worse. But, that of course is always a issue. Now, so that's a DAX. Nikkei is a little bit better, but still falling from supply. But you can see, so Nikkei, you can see that we've fallen from the 60-minute supply again. Come into the 240 demand, did take a bounce out, but now you can see with the rest of the markets is starting to fall back down, with the 60-minute demand now lower, coming in at 18,433 to 18,190. And it also, one thing about Nikkei too is a little bit higher, you're going to have some daily supply. So if we are to come down and test this daily demand and is able to rally back up on a new high, it is going to take us into that daily supply. So that's something to look out for if you're trading that Nikkei. Actually, the other market I did want to look at really quickly was the FGBL before we get into so FGBL. This is what it looks like to me. Just like with the other bonds, it is, it attempted to break out, is holding up above this daily demand. Daily wise, there's not a whole lot to stop prices, but you can see we are just stuck right in the middle here. So we have bounced off of the 240 supply right now. I mean, it's 240 demand, and I think the supply is a little bit higher, sorry. And supply is still a little bit higher, coming at 175.98. All right, so that's a quick look on that. Let me just see on the 30-minute. The 30-minute, we do have prices stuck between two areas that you can see on a new low is going to take us down to this 173.35, 173.25, and then on a new high is going to take us into the 174.24 up to the 174.41. So you can see in the bigger picture, prices can definitely move a lot further and faster. But for the meantime, while we're stuck in between these two ranges, does look like above the previous high, below the previous low. You do have these two levels that can, hold prices down for and keep prices up for a little bit and start to continue to range for a little bit inside of the FGBL. And that's for the bonds. All right, let's move to the S&P. Well, so let's deal with that for a minute, the profit. So let's take a look at what's going on at the current moment. The S&P, since it's rallied off of our weekly zone, has not quite tested back up into this upper daily supply. Last time we were here, we did say things started to slow down a little bit, because you can see ever since this rally broke to the upside, we held in for this area for a couple days, then started to break out again. Then we came back, pulled back, and then we started to move up, and then we couldn't create another new high, and prices started to slow down for a bit. And now you can see the sell-off started the other day. So what do you do in this situation initially, right? You have a lot of strength coming in. You have a lot of strength coming into the supply zone because of the rally up, right? And then you can see, so a lot of times what happens is this. So if you take a look at really what you're seeing here is that prices came in, started to come down. So of course, if you had your first target down at the first opposing area, which is fine, right? You know, you're not sure, you're thinking that prices, because of how strong the strength is, that's fine. We had a 5-minute demand zone that also held for this, so that's fine too. But you can see if you really moved your stop down, so you say, oh, I don't want to risk all this, or if you're just taking this second level, right? A lot of you just took, you know, even this area right here. Right, a lot of you just took this area right here, right? So then you can say, well, you know, I don't want to risk that much anymore. So some of you might say, okay, break even. If it's break even, you might survive it, right? Because it barely came back. It looked like it missed just the second time around. So if you moved it even to break even, you might have survived for a bigger move. For those of you that were saying, well, I want to do, you know, break even plus some commission or things of that sort, well, then more than likely you're not going to survive. Remember, when things are going to start to turn, a lot of times, so what's lucky for people that did take it up into this area was you did form a new supply zone. So to keep it safe, to not lose too much, would be to keep it right above that supply zone. That would have been the way to do it, right? You can see once you started breaking this, right, there was nothing to stop prices from really falling, right? Because there's nothing fresh down below. A lot of it that we've seen on the 60-minute, you can see, right, we really didn't have too much demand coming down through here. And now even as we move into these lower zones, they are tested and they are overnight. So what could you do inside of these right now is you can continue, depending on, you got to figure too how much you are willing to, you know, if you have multiple contracts, you take some off. If you have a way, if you want to move down your stop, you want to move it to a place. So now you can see, you can move it down to, you know, above this area or above this area. You know, it depends where your tolerance for how much of a pullback you're going to go for, right? You know, you can go, you have a couple places, and the bigger the pullback, well, you have a better chance of surviving possibly a bigger move down. But then now you can see how much you're going to try to possibly give up in order for this to continue to move down. Because now what we see on the 240 is the next fresh area is really down almost by the 2600, right? So if that is your plan to try to move down there, how much are you willing to give back in order to attempt to for a move down? A lot of times, you know, you want to make sure you want to get out also before you know, people are trying to get in. So typically you would want to get out a little bit before that area, right? You don't want to wait until that area. And another thing too is if, say, for instance, we drop from here, we form some new supply and you're in from the top, again, you're going to have another area where you can move down move down your stop too as well, right? All depending on what you're trying to do with your trade. So these are the type of things you should know, prior to getting into your trade. One is your plan of action. Are you going to take profit at a opposing zone? Are you going to do a trailing stop as prices start to move and form new supply? Right? But you should definitely always know where that's even if you're doing, day trading and you don't really have time to, okay, let me see where it is. The minute you put in your entry, you should immediately know where your stop is going to be. I mean, you should know that beforehand, really, so you know your risk. But the target wise, you should immediately go there and take a look, because when the day starts moving and is moving fast, you're going to have your emotions come into play where you're not going to follow your rules anymore. So that should be pretty immediate once, and it's the same thing here when you're doing your longer term trading. Know where the opposing areas are, and then know how you're going to deal with them once prices get to that area. Okay. And of course, you want to, like I said, you don't want to be competing with people that's trying to get in. You want to make sure you get out before these people are trying to get in. Okay. Now, when we are out at extremes, you're going to want to do your better, higher positioning trades. Once we get in the middle and you still want to try these areas, that's where you start to move down into your position size, right? And if anything is beyond what you can risk, then you're going to have to pass the trade and wait for something else to develop. That's very well too. But then remember too, these days, we also, there's a lot of micros that have come into, especially with these equity index markets, there's micros. You don't have to. So that makes a big difference too, for those of you that couldn't take these 4-hour or daily zones before. Now, more than likely you can because of this scenario. Same thing with currencies. There's micros inside the currencies too as well. Gold. So, if you're having some issues, move down to those lower areas. So let's take a look what we have going on for today. So we know where the demands are. The fresh one is going to be down at the 240. We're going to be coming into some of these retested, overnight demand zones. So the one thing I would say about demand is I'm going to wait to see if prices actually form some demand and try to hold up, then try to take it if it's anything above the fresh zone. That's all I'll wait to do in terms of the demand. Now, in terms of what we're going to look for coming into today, so let's go take a look. So this is what we have at the current moment, where we have the overnight high coming in at 28.25. We are still forming the overnight low at 27.90.25. Yesterday's low was 27.86. So now this is your options coming in for the people, longer term, you're already in. You should be just managing your trade. For the people doing a little shorter term, so this is what you have. Above the overnight high, you do have these 2 5-minute zones. So they can very well work for you above the overnight high. However, we're a little bit higher probability. What we do have is above yesterday's high, you have a 5-minute zone coming in at 28.93 to 28.98, which is just below your 2 30-minute levels, right? So that's kind of your scenario that you have. So you have the 5-minute zones that are right above the overnight high, and then you also have the 5-minute zone that's above yesterday's high. For the NASDAQ, let's just go check the SPY real quick too while we're here. So for the SPY, as you can see as well, you'll have the same 5-minute zones that's above current price. You have your 30-minute now that's developed at the 290.74 up to the 293. You got the two zones on top of each other should prices get back to there. It did hold at the previous 240. But now, as we start to come down, you can see too, right? Not a whole lot is fresh below current price until we get down to a couple of these gaps down below. So just be aware of that coming into today. We don't have a lot of fresh demand that's right below current price. I would wait for prices to give a hold, and if it's going to bounce up to actually show me that before, if I'm going to try it long again before the actual 240 zone. All right, you can see here too with the NASDAQ. We came down into our 240 demand. We did bounce up pretty nicely from the 240 demand, as you can see. Now we're going back in. So the tricky part with today is, even though we're still having a lot of weakness, our first initial push below, well, depending on how far we go, we still got another over an hour before the market opens. So we can continue to make a new overnight low. So depending on that, you can see that if we hold in this area and we continue to push lower, it is going to take us further into the 4 hours. So that's what makes it a little bit difficult in terms of if you're just saying, I just want to outright, short right here. Let's take a look at so the 30-minute supply, you can see, is coming up at 92.62 to 92.96. The next area, now you can see these have been tested down below. Not this one, but it is overnight. So this first one has been tested before at 88.23, 87.92. You can see that's what created that. Also an overnight zone. And then down below, this lower one at 84.58 to 84.20. This hasn't been tested before, but it is an overnight zone. Now, if we go into what we're looking at the current moment, this is what we have. Right now, we have the overnight high coming in at 90.38.50. Overnight low still being created. Right now, sitting at the 89.11.50. Yesterday's low is coming in at 88.78.25. Above the overnight high, you do have these two 5-minute levels. And then again, right above the yesterday's high. And the only reason why we're doing that is if prices were to try to, start to hold and create some new demand because of a pretty large rally down, you can see that these areas can still be a trap area above the yesterday's high. So this is a 5-minute zone coming in at 92.05.50 to 92.32.50. All right, now let's go on to so as far as who showed the weakness first on Wednesday was really the Russell. The Russell, as you can see, is way below. It's still hanging in actually this daily zone, way below still its next daily zone of 14.733, and it was the first market to show weakness that day. I believe it was Wednesday. Yeah, first market to dump off. It did come down and hit our, this fresh zone. It did create a rally out, but you can see this one. We did rally out to about 1240. Now we have continued to drop down. I think the next thing too to watch out for is if we formed some new supply, right? If we continue to drop, we may even be forming some new supply here. So that's something to also keep out for. The other thing I want to point out is you can see a lot of, especially on the small caps, is we've been tested before. So you can see we pulled into this demand zone, we rallied out. We pulled into this demand zone and we rallied out. This is a possibility of an area that's right above this demand zone at the 1127.90. Actually, it starts up a little bit higher, I believe. It starts up at the 1143.50 area. So that one you can see is that one I can see being a first time back into there, but it is off of these tested demand zones. So the Russell looks to me like the one, if it is going to create a lot of weakness, there's not a whole lot of great demand down below. Same thing with the IWM. Came off of our 230-minute zones. It did have to test into the second area pretty deep. Then we started to fall. Now you can see, so this 30-minute supply at the 125.20 to the 126.03, it comes in line with this area on the RTY at the 1255.80 to 1265.30 zone. So those come in line together, as well as this lower 240 that I was just talking about comes kind of in line with this. You can see where prices stopped as well right down. So that 240 lower demand is coming in line with IWM at the 1113.54 to 1110.55. And again, like I said, with this area here, what's happening is if we do start to break pretty well, it could very well become new supply too as well. All right, let's move on to the Dow. All right, you can see with the Dow, again, the fresher area is still coming in lower at the 21,952 to 21,645. That's really the area that we have not tested yet on the demand side. Supply side, you can see we got the same 230-minute areas on top of each other. That's coming in at 23,995 to 24,070 to 24,153, 24,225. Now let's go take a look at what's going on at the current moment. So at the current moment, you can see that our overnight low has already went below yesterday's low, because yesterday's low was coming in at 22,980. Our overnight low inside of the Dow is now sitting at 22,913, which is telling me the Dow is weaker than the rest of the markets, whereas the rest of the markets have not tested their overnight low quite yet. The Dow has already went below its overnight low. So more than likely the stocks inside the Dow are the ones dragging things down further at the current moment pre-market. Now the area of the overnight high is coming in at 23,292. You have the same 2 5-minute levels. I did look a little bit differently at this market just because I did notice that yesterday's overnight it did not make it back to. In the S&P, yesterday's overnight, we did come back into the zone, did fall out of it. Inside of the Dow, so these are two overnight 5-minute levels coming in at 23,662 to 23,750. We did not come back and retrace back into. So even though it is an overnight zone for right now, I'm still going to look into it, whereas the other markets, I'm kind of looking above that and looking to the yesterday's high above. But so you have the two 5-minute zones above the overnight high, and then the 2 5-minute zones that's coming in right. You can see pre-market where prices did not get back to there. All right, let us move into the bonds. So here's a picture with the bonds. So same old scenario here. Nothing has changed. We have gone from 240 supply to 240 demand to 240 supply, came back into this demand so far, and now we're right back in there. So can we fall from here at the moment? Can equities try to find some gripping somewhere before? And it is very possible since we are sitting back up here. However, we do have looks like a new demand zone coming in at 139.05 to 139.01. So that could suggest that if we do pull back, that we're still going to eventually move and take higher. Now, is it a big debate still going on about negative interest rates, non-negative interest rates? Yes, and that will continue to be so. So we just got to play the charts as it shows us and kind of not really listen to what they're saying, because you're not going to get an agreement on both sides. So that's just the way it is. The 30-year has missed its upper 240 for a couple of times now. Still not really close. The only thing I'm seeing now with it is that as we start to approach this upper zone, it does look like we have a few 60-minute zones down below. So you can see we have a couple of 60-minute zones. I want to see, did I put it on? Yeah, I put it on here. That's why it's not there. So you can see we have down at the 180.22 to the 180.12. And down below that, 179.16, 179.7. All right, so that's on the bonds. Let's now move to let's move to crude oil. So crude oil, of course, has gotten some decent news on just in general, you know, between the production cutback and then things starting to open up and starting some usage now coming in. So it's got decent news. So to me, it looks like what we're going to be dealing with is this at the current moment, where so you can see these two overnight areas. So it is holding up at the second one after that move. We are nearing, let me just see where I had it in. So this is what it looks like to me. We are nearing this large area right up above current price. It does look like it's just hanging right below there, attempting to move out, but getting a lot slower. Hasn't really broken any close demand yet, as you can see on this last, ever since it pushed up and then it pulled back once. We're just hanging right through there at the current moment. In terms of what's up above current price, it's not fresh either. Right, you can see right up above current price. We've been here a couple of times already, one time, 2 times. So if it does pop back into there, it is going to be the third time back into that zone. Now, for those of you that did take the 5 minute, depending on where you put your stop here, you know, crude oil, you got to give it, you know, it is an overnight area. One thing I did notice afterwards, though, that it was in a general larger 30-minute area. But then a lot of you don't like taking, you know, it's a general larger 30-minute area, but it's a 5-minute, you know, giving you a smaller risk. But then, of course, you can't put your stop extremely tight. So that's the only thing I worry about with the crude oil in the smaller time frame and the overnight levels. So for right now, of course, our fresh demands are still down below. These are overnight demands. That's a little bit lower at 22.50, 21.50. And then you can see the day session ones are really coming lower down near the 14 mark. For the current moment, let's see here. We do, you can see, have a little bit of a 5-minute right above where, so this is below the overnight high that you can see is at 26.75. So this 26.58 to 26.64, really where prices started to break down from. We couldn't quite pull back into there. It is above yesterday's high, as you can see, but the overnight high did create a move above yesterday's high. Right now we've taken out the close demand, not quite the second one, but we did take out the first little close one, but you can see why it's not in fresh area either. Now it just starts to move down, and so we're still hanging on to a little bit of close supply at the current moment. This area that I looked at, it looks like it's in general behind the, when I go see it on a small time frame. I go look at a small, do I not have enough data? Let me see. We'll go a little bit further back. So when I look at it on a small time frame, not a, where is it? 27. Let me put, you know what? This is what I do when I can't. I make it really thick and just make it a completely different color. Because otherwise, did you ever go zipping back and forth and be like, okay, did I just pass it? Did I not pass it? Did I see something else? Okay, right here. So it's a large, ugly area, but we are just kind of hanging between this 5-minute and a little, you know, even smaller time frame right there. So it's an ugly area, but this is kind of where we're hanging at the current moment. Just showing you where we are in general with that, you know, untested fresh zone. But that's my, you know, for those of you that have that issue where you're zipping past and, you know, because you have this small little black line going back and forth and you can't find it, and sometimes you go way back. All right, so that's on crude oil. Nat gas, you can see once it comes back and tests its daily 50, you do have these two zones on top of each other, and that's coming in at 1756 up to 1802. All right, let's take a little look at gold. So gold is still within our bigger move of the 60 to 60. So those of you that remember, it's still within side of that bigger move. Now what you see, the fresh area is going to be coming in at the supply of 1747 to 1756. Fresh in terms of where it hasn't been to kind of intraday. It has been into, like I said, up and down. We're still inside of the range of the general larger picture, but this is just kind of the intraday kind of range in between, right? Overall, it's still holding up strong, moving to the upside as people continue, to pile into this market as, you still have uncertainty in the other markets. So that's always going to be the case, once that starts to happen. But you do have these supply zones. So once you get up here, I would look to see if you are into what will help you if you are into some equity demand, that could help as you get into here. Otherwise, it's going to be more of a short-term type of play. This area I did put in just because it's a 10-minute, but you can see where the overall picture of it is. It is not in a great space of where, because we've been through this area many times before, so I wouldn't put as high quality into it. Just it is stuck between kind of two 10-minute zones, so I marked them out just for that reason, because it is always good. When it's not moving a whole lot of volatility, you can get some bounces off of both sides. So you can see up at this 1731.90 to 1733.90, and then down below both overnight zones, 1707.70, 1706.30. But the caution on the first one is that it is not located in a great area. Yeah, it is. Gold is, but you can see that it's, need some more. I don't know why it's like that. Let's get some more days in. All right, so you can see it is, but you can see it's hanging up at the highs, right? If you really take a look at it. So since it broke up above this previous high, we have not been able to pull too much back from it. So even with a pretty decent equity rally, it's still hanging above this. So at the moment, still showing, pretty good strength. People are still, believing in gold rather than the other markets at the current moment, as you can see. Copper is coming down a little bit more with the stock market. Like I said, it does track behind China, and overall just the more than the other metals. So it does get impacted by the stock market. So you can see now we have two. So a 30-minute zone up above is higher at the 2403 to the 2410. Right here, you do have a bit of a 15-minute zone after a breakdown from, you can see the previous close. We did hit below the yesterday's low and did create a new overnight low, taking a little bit closer back down to its daily 50. So this area here is coming in at supply at 23,451 to 23,493. Fresh demand is still much lower. This area here has been tested once. It did create a very strong move out in price, but it was tested once before at the 23,127, 23,011. Down below is really where your fresh area, where we have not tested, which is 22.55 to 22,476. So again, with any of these is you always want to see, so if I'm looking at a non-fresh demand and I'm seeing possibly something new right up above, I'm not going to try to, if I'm going to try to take it for a bounce, I'm not going to try to, move into the next area. I am going to be more careful and try to get out before that. So that's just something if you are curious about those things. All right. Yeah, I always say, tell people be very careful on. I know a lot of people, they're very into, whether I want a specific, 2 to 1, 3 to 1, 5 to 1, 7 to 1. You got to pay attention to what it's telling you technically, because if you have lots of room down below, you have broken a previous demand and there's a lot of room down below, then yeah, then absolutely. But if you are looking at an opposing area and the market doesn't exactly know where your entry is, doesn't exactly know where your stop is, so therefore if you're saying I need a 2 to 1 or 3 to 1 from this area, the market doesn't know that. All it knows is, okay, here's your opposing demand. So you got to figure it out according to yourself. Well, okay, so if this is it, so if it's showing me that I have 4 to 1 room and I want to take 3 to 1, so is that good enough? If it's showing me I have 3 to 1 room, I'm going to take it at 2 to 1. Is that good enough? So you have to figure that out rather than once you put it in and you say I have a hard rule about this, because depending on where you're putting it, that's what it's what the opposing level is showing you. So make sure you pay attention to that. Pay attention to where we are on the charts. They all matter, because if you really think about it, why do you need to know supply and demand so well? Why can't you just learn it? Sure, you can just learn it simply and trade off of it. You can absolutely do that. But in order to try to get the best of all three components right, where is putting your stop, putting your targets, then that does come into, yeah, you do have to master it, because otherwise you're going to get one of those things wrong, right? It's either in the beginning you have trouble with the entry, then you may have trouble with the stop, then you have trouble with the target. So in order to try to get it to the best of your ability, you want to master it so that you can do that. And the other part about it is too, like I said before, trading's always going to make you mad. So don't be upset. Get to the point of profitability for your trading. Don't be upset that you didn't capture every single move in the market. Make your rules, stick to your rules, and act accordingly. Don't try to be the all-time, of course, sometimes you'll be the all-time all guru, but not always, right? As long as you're getting what you want out of it, which is performing depending on a daily, weekly, monthly, yearly basis, depending on your trading. That's what matters. So we're going to do the dollar, then we're going to do some stocks. All right, let's take a look at the dollar. Ooh, dollar's showing. So, yeah, would I say that we are getting a little bit more of a move after yesterday's, Powell comments? Yes, it does look like it. So here you go. The dollar, we're finally trying to break out above this 240 zone. So it's been a while. You can see we're ranging for quite some bit now. The upper zone you can see again is going to be a retested zone. So nothing fresh in terms of where we're going at with dollar supply. What do we have? We do have some 15-minute areas down below that you can look at. You can see that's coming in at the 100.09 to 102, and then to the 99.96 to 99.86. Yeah. But, don't lose sight of we're still inside of here, though. So even though it looks like, whoa, this is amazing, don't lose pure sight yet, because so far what we have noticed within the ranges is all it does is get to the top of the range and fall back down, get to the bottom of the range and climb back up again. So we broke out of the inside ranges, but we have not broke out of this. Where did we start this from? We started this from the beginning of April here. So don't lose sight of that just yet. So all right, let's move into a little bit of the Euro. So the euro did miss so I would keep this still as your main important zones where you have it looks like the spot market came a little bit closer, but nonetheless, you really had to be quick to catch it. The futures market does look like it missed just a tiny bit. So if you can see the two sides. So if you want to, with the dollar 15-minute demand, so they are 15-minute. With currencies, it depends with the news. Smaller time frame can work for you, but it has tendencies with big news to not be able to work. So we do have, I believe, German GDP tonight, so that may cause some sort of problems too. But let's see, this close area that comes in line with that 15-minute dollar demand is this 108.44, 108.53, 108.62, 108.73. And you can see here for the spot market, looks like it came a little bit closer, but again, you had to be a little bit ahead of the level in order for you to get into it. So I would still keep these as your main levels above current price. Down below, we've tested these areas already down below. And then these are your 15s that mark up with the dollar. Okay. Yeah, I would, only because you do have these, because think of it this way. If it just missed, but now you form these two little areas here, so if it gets all the way back there, then there should be still some. So the only thing, of course, is if you form some new demand when this starts to get taken out. That's probably the only thing I would watch out for, being that we've had such a big move in the euro already. So that's probably the only thing I'll watch out for. It's not bad that you do have some supply needs to take out to get back up there again. Yeah. All right. I don't think there's a whole lot to say with the Aussie. The Aussies just retested our supply zone again, and pretty much acting like the stock market, right? Hitting back down into previous demand zones where we not fresh areas, the lower. So if I want to say anything, it's a little bit slower than the stock market. Doesn't have quite as much volatility because people are busy trading the stock market when the stock market opens. But in general, it is a little bit more following, more aligned, just like hitting the supply again and falling, and then having retested demand down below. Fresh demand is still lower. So that's kind of the Aussie picture right now. So I wouldn't go too much more into it. I mean, you do have some 5-minute areas above if you're looking for a little bit of day trading, and that's 64.90 to 64.99. The pound, we didn't have sessions yesterday, but some of you who did, you might have been able to get into some of these areas where it did rally back up into, you had these two 15-minute areas on top of each other, but we didn't have a session yesterday, but it did come into them, and we did started to drop out. With the pound though, also just slowly, does look like it's slowly, after hitting pretty deeply into the 4-hour zone twice, we have now started to kind of hold some closer areas of supply as we start, since there is room for prices to move. So now you can see that 15-minute, and you have this little bit of a 5 area up above, but remember too that's already hit that 15 and started to come down. So I would consider this lower quality in general at the 122.91, 122.99. So CD, same thing with the rest of the markets. It's come back down. It hit our 15-minute demand, which is right in line with this. So again, not fresh areas, has continued to fall down with the lower This one's actually hit too, but it just touched, which is down at 67.39, 69.35. It also, so with these 5-minute supplies, the only thing I would say is this, is, you know, what really needs to happen with these is, you know, you can't have the dollar start turning back down. And with CD is you can't have a huge rally in oil either. So those are kind of, with the 5-minute supplies, that's what I would be careful of. But these are your two 5-minute above current price with CD. JY, directly right in the middle. Again, for those of you who had a session yesterday, you might have been able to catch it where we did drop right into that demand, started to rally out, but now we are stuck between. So we had this from our session, the 60-minute supply. And then, so this is not too surprising what it's doing at the current moment right now with JY, because in terms of the bigger picture, this is where we are. We're just between our two 240 zones. So now I would really start, for those of you trading in between, I would really start to be extremely careful as we start to get more and more, you know, you can just see this is right in between these two zones that we've had. So you are getting some more volatility, but nonetheless. Then same thing here with the Swissy. It also missed its upper zone. Was able to hold demand one more time again and before it started to move up, but was able. So I would still keep the higher zones in play. And like I said, these closer zones, I would only look at if we are really having some dollar hold at those 15-minute areas. So that's you know, just realize that for these lower zones, that's what you need in terms of moving this market back down. All right, let's take a look at a few stocks. So, no, not here. Let me go over here. All right, so I guess one that's been in the, so what I'm seeing with Beyond Meat is this, you know, you can try to trade it in between right now, but what I'm seeing is it looks like this is where you're going to be caught between. So it could become a little bit difficult in terms of what's available above and below current price right now, because you can see on the weekly, we've hit up into this area up at 145, 162, and then now we have also developed an area down at the 112 and 288. So it's a large range, but just realize it can get very choppy in here. So if you're looking forward to trend one way or the other, it's going to need to start to take out either way. So I would play it for smaller targets for right now. So you can see that this gap down below at the 174 to 97.10. What I did see was that on the 15-minute on the overnight on the pre-market, you have kind of these two areas in the pre-market that's in between that gap zone. And that's coming in at 106.02, 102.44, and then the lower one is 93.82, 91.54. All right. Let's see where Facebook is. So Facebook, I think this was a very old level, but it's overall coming off of the 213 to 218. So you are going to have, so 203.50. So you can see up above on the 15-minute, you have, just like the rest of the market, you have these two levels on the 15-minute. On the 30-minute demand. So this area is going to be where your gap is going to be, right? So it's not, It's obviously not a fresh area, but this is where your gap's going to be. So I will look at this kind of this open space right below it rather than the actual, candle in itself. So you got some open space that's right below it. That takes you down to the next low candle there at the 193.92, 189.86. I don't know if I want to get too much into Tesla because all he needs to do is tweet something and it's, but we'll take a look at it. All he needs to do, and he's good for that. Loves the tweeting. Well, this is pretty, you can see a very strong move out of the zone, but that's way down below. We don't have to look at that right now. At the moment, 15-minute, what do I see? Little bit of a 15-minute underneath, but I would need to see the overall stock market try to hold here. 745, 737. But like I said, this one you got to watch out for him. He tweets constantly lately. And then Snap, you can see on the weekly on a pullback. You got these two levels on top of each other, 1376 to 1249, 1207 to 1280. All right, I think one more down the close zone. What we'll look at is you can see here. So it is a low price one, so it can be very whippy, but it does look like it has some supply right up above after a fall down at 744, 767. Okay, so that's what we will end with for right now. And again, let me put up the exciting time that is coming, which is tomorrow. So any of you that hasn't emailed me yet, get it on in because you don't want to miss out. Don't be the last one left on the boat. You want to get in and take a look, and I believe you will love it. The team has done extremely hard work to put this all together, and I'm sure you will love it. So if you didn't subscribe, and if you didn't email me, and I will see you soon. We'll get the schedule out. Just keep your Twitter and emails, and you will continue to be involved. All right, y'all. Have a great trading day. I'll see you soon.